Greetings, members, one and all of the Salivation Nation. Silver holds above $19 an ounce. What are they saying about it now? Let's explore. That's right, exciting news for silver bugs out there. Or is it really all that exciting? I don't like to rain on everybody's parade because I'm celebrating with you. For those of you who don't know, I have been predicting $20 silver by the end of the year, and this means we're a little bit closer to it. But my celebrations are only temporarily, or they have a caveat. In other words, we don't want to get too excited because as quickly as silver can move up, it could certainly move back down again. But as of the recording of this video, the gold to silver ratio is hovering at around 94.5. And that is good news to see it tighten up a little bit, but still has a long way to go to get back into anywhere near normal territory. And what is normal territory these days? Well, according to recent history, it's right around 70 to 80 to 1. Although, if you look at it through the lens of the last several years since 2011, when silver was way up, it's probably closer to between 55 and 65. And I believe it should be in that area. If silver is going to perform the way it has historically, it really should be much closer to the 50s and 60s. But we'll see how it plays out. Some people say that the gold to silver ratio doesn't matter, but I believe it does because it gives an indication as to how the markets view one metal over the other. And that is important for your strategies in hedging and preserving your wealth because silver has become very volatile. And its volatility is apparent today as it has performed at an almost 2% increase right now compared to gold's a steady as she goes, almost a quarter point increase here at 1803.60, and silver's comfortably above $19 today. That is been pretty steady throughout most of the day here. So what are they saying about it? Well, we have Credit Suisse saying here that silver is to become the new gold. So strategists at Credit Suisse have noted a great silver performance lately and expect the white metal to look for the $26.22 resistance on a break above $21.14. What's more, gold to silver ratio shows the latter is in line to extend its performance. And here's the key quotes here. Silver continues to push its way higher, and there are seen clear similarities between price action now and that of gold last year. However, only above $19.65 through $21.14 would you see a multi-year base confirmed, with next resistance then seen at $26.22. Well, we got to get to 1965 first. And right now we're not there, but we got closer to it today. I think I saw it got up to 1940 for the ask price as the high. The gold-silver ratio is also back pressuring price and retracement support, beneath which would suggest silver can extend its current outperformance. At present, though, this is still a correction within the longer-term gold outperformance trend. So that's the opinion of Credit Suisse or Credit Suisse. And this article here from Metal Miner says silver's recovery has been dramatic, but how high can it go? It says earlier this year the silver market was going through a tough time. Its reaction to the growing pandemic was in stark contrast to that of gold. The disconnect between the two metals rose to historic proportions as gold rose on the back of deeply negative real interest rates and expectations, justified or otherwise, of rising inflation as a result of massive fiscal stimulus. Gold prices surged and silver prices fell as the industrial prospects for the cheaper sibling collapsed around the world. There you go. That proves my point. And that silver, though I do believe it is money, it is hibernating money, and it is seen as a hedge against economic stability, for most of us in this community, but the overall market sees its industrial applications more, at least in the paper silver ETFs, and that's why the people were selling off. Despite making some recovery, silver prices have risen some 20% since March. Silver is still estimated to have as far again to go, according to Goldman Sachs, as quoted by Reuters. Over the last 20 years, silver prices have closely tracked an equally weighted basket of the continuous commodity of index and gold prices. Seeking Alpha observed, by virtue of having a foot in both camps as both an industrial and monetary metal, the strong gains seen in gold over the recent months and the bounce in the broad commodity complex have supported silver, but it still remains deeply undervalued on this basis. Silver's case, apart from underperforming its historical average, is the potential for it to be boosted by the growing Chinese recovery driving demand for industrial consumption, particularly in electronics and plating. Its attractions as a safe haven investment and supply constraints due to COVID-19 mining-related disruptions in Central and South America. One arbitrage doing the rounds these last few months was to sell gold and buy silver, largely on the historic disconnect between the two prices as gold soared and silver collapsed. But with the economic activity improving and supply-side concerns not going away, silver's continued rise has better prospects regardless of the trajectory for gold or the fact that historic connection between the two has partially recovered. Goldman sees gold approaching 2,000 by next year. If it were to break that level, then to rise further. Long positions in the gold market, however, are already substantial, and the bank sees upwards momentum slowing as the global economy recovers slowly and risk aversion eases, which means that some may take a chance on silver and therefore closing the gap for its industrial attributes. We'll see here. So very interesting indeed. I agree with some of this. It's fascinating to see. Gold is really the ultimate store of wealth and value. Silver has been volatile, but it is a store of value as well, but it is more volatile, and that's something we should consider. Now, Seeking Alpha, as referenced in the prior article here, says that silver prepares for what can be an epic move, according to Andrew Height here. The price action in silver can be wild at times. Throughout the past years, silver has displayed a lack of respect for technical levels. The most recent example came in March when risk-off conditions caused by the global pandemic sent the silver futures market to its lowest price since 2009 at below $12 an ounce. Technical support for precious metals stood at the December 2015 low of $13.63 per ounce, but it blew through that level like a hot knife goes through butter on its way to a low of $11.74 on the continuous futures contract. The price action below $12 turned out to be a blow-off low in the silver market. Silver only spent a few days below that $12 level in March. By early April, the price was back up above $14 per ounce, and in May it was trading north of $18 per ounce. After reaching a new 11-year low in March, silver rose to a new high for 2020 in early July. The move to the downside was a few short months ago, could have set the stage for an epic rally in the silver futures market. The ETFMG Prime Junior Silver Miners ETF product SILJ tends to outperform the price action of the silver futures market when the price of silver rises. And this talks about the new lows in the first quarter and new highs in the second quarter. In late February, the price of silver on the continuous futures contract in the COMEX rose to a high of $18.92 per ounce before risk-off conditions caused it to collapse. Then it talks about the weekly chart highlights the rapid decline to a low of $11.74 per ounce took silver 37.9% lower by mid-March. The total number of open long and short positions in the COMEX silver futures market dropped from 244,705 contracts on February 24th to a low of 131,830 contracts in May, a decline of over 46%. The price carnage caused market participants holding speculative long positions to scramble for an exit. By the end of March, the metric was already below 140,000 contracts. Falling price and decreased open interest is not a technical validation of a bearish price trend. However, the elevator shaft road to the downside caused lots of pain for silver bulls as the price violate technical support levels as it fell off to the side of the cliff. And that's why I've never really been a fan of really utilizing technical analysis, because so much other stuff that comes into play, and you really get into the minutia of the numbers and trends and not see the bigger picture here. Silver did experience a V-shaped recovery since the mid-March low. After making a new 11-year low, the price rose to a new high for 2020 at the beginning of July when it eclipsed $19 per ounce for the first time since September 2019. But keep in mind, that the recovery is only really getting us back to a prior level, and silver really should be a lot higher than it is now if it was anything like gold as a hedge, at least how it's perceived as in the marketplace these days. I think that's why it's not there. At the end of last week, nearby September futures closed at $19.53 or $19.05 per ounce. Price momentum and relative strength indicators were rising and heading towards oversold territory in the daily chart. And so the next section here talks about how gold is going to break new highs and how silver could possibly follow. It has been lagging in the price action in gold really since 2013. The silver-gold ratio's long-term average is around 55-1, as I talked about previously. The ratio hit a record high of almost 124-1 when silver tanked in March, but it has been moving lower as the price of silver has recovered. As at the end of the last week, the metric stood around 94.43, which we just looked at where it is now, it's about the same. Gold has been on fire since August 2018. In June 2019, the price rose above its technical resistance level at the July 2016 peak of $1,377.50. Late June, the yellow metal moved to its highest price since 2011 when it broke above the $1,800 level. So again, this talks more about gold and that silver should be waiting for that gold to break out to new highs before making a substantial move. And it usually does delay. People keep saying to be patient, and I'm trying my best, I tell you. But we'll see. It's going to have to break those new highs in order for silver to really break out. And I believe that's going to be what it takes. And it shouldn't be what it takes. Really, that's my point. He says here that silver has a lot of potential. The technical picture for silver becomes extremely bullish above $21.09. The next target of the upside will be August 2013 at $25.12 per ounce. The silver can climb above that level. The October 2012 peak at $35.44. The February 2012 high of $37.48. And the August 2011 level at $44.27 highs are gateways to a test of the ultimate $49.82 2011 high. That's a big, tall order these days because I think it's a different market than it was in 2011, 12, and even 13. And from 2013 to now, we have seen that shift of how silver is viewed, slowly but surely. But regardless, silver does have tremendous upside potential. The price action of gold is a sign that a new all-time high is on the horizon, with a significant decline in open interest, which was still below the 176,000 contract level at the end of last week. There's plenty of room for buyers to return to the silver market. But will they? That's really the key. Will people's minds change as far as silver compared to gold? That is a test to see. So yes, we can most certainly celebrate these moves today. I think it's fascinating and I think it's great, but it doesn't necessarily bolster our case any more than prior. Really nothing has changed at this point because gold is still going up as well too and moving at its expected levels, where silver has been volatile here. Still a lot of room to move up, And I think a lot of that is perception of the metal. We shall see how it all plays out. Post your thoughts below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.